Good morning, traders. The markets are reacting to fresh trade policy shifts with the US dollar under pressure as Trump's reciprocal tariffs take center stage. Oil is stabilizing ahead of key supply data, while gold remains near record highs despite profit taking. The Australian dollar sees mixed sentiment from China's economic data. Let's dive into today's market drivers. The US dollar index is struggling to stay above 103.35 after Trump's announcement of worldwide reciprocal tariffs, with details still unclear. Treasury yields rose to 4.23%, yet the dollar remains weak despite strong ADP employment data. Investors are trimming risk exposure, awaiting confirmation of the tariff impact. Technically, mixed signals dominate. The MACD hints a potential bullish crossover, but long-term moving averages lean bearish. Resistance stands at 104 with a further hurdle at 104.38, which is the 25-day EMA, and 104.71, which is the March 27th high. On the downside, 103.32, which is the March the 20th low, is the first support with potential break lower, potentially driving the index towards 103 and 102.53, which is the 76.4% Fibonacci retracement level. WTI crude oil remains near the $70.50 mark as investors weigh Trump's tariff policy and its impact on global demand. Uncertainty ahead of the announcement is limiting market exposure, while US crude inventories rose by 6 million barrels, signaling supply side pressure. Technically, the 14-day RSI at 59.6 suggests cautious bullish sentiment. A breakout above 72.14, which is the 200-day SMA, could push oil towards the $73.10 mark. On the downside, support lies at $70, followed by 69.98, which is the 50-day SMA, and 68.65. Gold, on the other hand, is currently fluctuating between $3,100 and $3,135 after Trump's tariff announcement. Despite a record high of $3,149, profit taking and an overbought RSI above 70 suggests a temporary pullback. Technically, support remains at $3,100 with deeper corrections possible towards 3076 and 3057. However, strong demand for safe haven assets could push gold to test 3149 again, with potential upside towards the $3,200 mark. The Australian dollar is hovering around the 63-cent mark after rebounding from a low of 62.60. Trump's tariffs on China create downside risks, yet strong Chinese data supports the Australian dollar. Technically, the pair is trapped between 63.48, which is the 115-day SMA, and 63.77, which is the March 19th high. The MACD still shows downside pressure, but RSI around 50 indicates potential stabilization. Key support lies at 62.32 with resistance at 63 cents and 63.10. That wraps up today's morning market outlook. Keep an eye on Trump's trade measures, oil supply response, and gold's ability to hold near record highs. The dollar remains under pressure, but tariff uncertainty could drive volatility. Trade smart, manage your risk, and I'll see you in the markets.